This is the market video for the week of December 8th, 2014. My name is Michael Saul, also known as Tiny. Before I begin with the market, just want to make a quick announcement. We will be having a free webinar this Wednesday, December 10th at 8 p.m. Who is we? Paul Schatz and I will be hosting this webinar. We'll be talking about market timing as well as the January effect. You don't want to miss this. We will be revealing two special systems that we both use to help us make better decisions in the market. All the rules are going to be revealed. It's not going to be one of these that we give you almost everything and then you have to pay for the extra stuff. We will be promoting a special workshop, or market timing workshop, that will start next weekend. So if you are interested in attending the free webinar, there's no obligation. I will leave a link in the bottom of this description on YouTube. So make sure you're watching this on YouTube, and if you read the description, you will see the sign-up link. So you can go there and sign up right now. Like I said, it's free, and it's this Wednesday at 8 p.m. Let's take a look at the market. I have been looking for a pullback, and it looks like we got one. Yay! Oh, no, that's all we got is basically a one-day gap down. We closed below the open. There was some nervousness that maybe we may actually get back to the 20 EMA, which we haven't been to since the end of October. But instead, we came right back up and we closed at a new high for the S&P. Not a new closing high, not the new all-time high, which was a little bit higher here. The Dow, okay, continues to move higher here as well. The NASDAQ, not really moving higher last week, but is consolidating. There's a really nice pattern right here. Of course, confirmation is key. We want to see it release from that. The Russell, still going sideways, and the mid caps also consolidating here, looking like they want to go higher as well. So my opinion, like I said, like I made fun of earlier, is that I thought we would get a pullback here. It's not happening so far. Could we still get a pullback before the end of the year? Well, obviously, of course we could. We can get a pullback into the end of the year. I don't think that's going to happen. I think the worst thing that we're going to do is get a mild pullback the last week, but I think it's going to be more like a sideways consolidation. I believe that if we are going to pull back, I think this week is the best week to happen. I'm not calling for that to happen. I'm not calling a high here. I'm not saying we get a big, deep correction. I just think that we get one more pullback, like a slingshot getting pulled back for one last chance for those late to the party or for those that are already at the party to drink more, right, to add more fuel to the fire and to get the market moving higher into the end of the year. All right. I do believe that we will go higher into the end of the year. I would love that to come after a pullback, but you know, the market does not always listen to me. The NASDAQ is in a nice pattern, like I already pointed out. Let's see if this could get moving, get with a break to the upside. Now, I do have problems with the Russell. Right now, we are in that time zone where the small caps tend to outperform the large caps historically, and it's not happening yet. Now, could it be coming? You know, could it be late? Yes, it could be. And I don't even know exactly when the small caps should start to outperform, quote unquote, officially. All right. But it should be kicking in by the middle of the month. So if we're not going to see the small caps starting to kick in with outperformance by the middle of December into January, then it's definitely a caution flag for me. No, it's not enough for me to just start running around like Chicken Little and saying, that's it, the top's in, sign up for my bear list, like the stinkpot super guru does. No, that's not what I'm saying here. What I'm talking about with the caution flag is that you have to really face the fact that we could be in for a larger pullback than what we've seen. You know, even larger than what we saw earlier this year, the September to October type of move. Okay, I'm not in that mode yet, but if we see that the small caps cannot step up to their leadership position, it's definitely a caution flag. for me, and that means stay on our toes with money management. There's a lot of complacency here. If we want to look at the VIX, okay, you can see the VIX getting ready to go back down here to multi-year lows. Once again, we had this one spike up, and everybody's all excited and everything, and oh, look at this, the volatility's coming back, and it lasted just for a couple of weeks, and now we're back to the chop. So real signs of complacency here. It's dangerous, but I'm not gonna sit around here and say, hey, you know what, it's time to get short. I'm sorry. The trend is still your friend, and the trend is up. The semiconductors are leading the way higher. Old school, right? That's the way we used to look at it. We used to look at what the semiconductors were doing. They fell kind of out of favor for a little bit, and financials took over, but the semiconductors are strongly in a leadership position here. Look at stocks like Clat Tanker. Really nice move up here. I mean, look at this move since the low in October. Better than 40% move, whatever this is, 43, 44, 45, whatever it is. Just a monster move on stocks like Clat Tanker. And it's not like a big, oh, you know, this is a $300 stock, $400 stock. I mean, it was under $50 when it bottomed out. Intel, it was around $30. It's up 20-something percent here. Okay, let's look at like an ADI, which had been lagging, and then boom, off to the races. What a shot here. I would watch for pullbacks or pauses, but I love ADI as a kind of catch-up play here. So see if it pulls back or pauses for an opportunity. NVIDIA also, nice push up, but again, I want to see if it pauses or pulls back. It's a little stretched. Broadcom too. Okay, let's look at the aforementioned financial stocks. Here's the banking index, which was chopping around. We talked about this last week. We wanted to watch this. And now, boom, it exploded up to the upside. Here's Bank of New York. Nope, here's Bank of America. I apologize. Looks like it's going for the highs. Here's Bank of New York. Sorry. Over the highs already. See if it could pause and head to that 45 level. Citigroup, nice push up on Citigroup. Again, extended. Watch for a pause. JP Morgan, extended. Watch for a pause. Zion, not extended, but has to get over the 200-day moving average before I even get interested. Northern Trust, a little sloppy here. Broker-dealer, nice push up higher out of this consolidation. We looked at this last week. Goldman Sachs, nice push up. Watch the 200 handle. Morgan Stanley, again, these are overextended. Watch for pauses / pullbacks on these, okay? Let's look at a couple other stocks. Caterpillar, sloppy. John Deere, looking better, okay? Consolidating up here. All right, see if it can set up in further upside here. Could come just from here. May want another candle or so inside a consolidation. See what that's going to do. Let's look at oil service stocks. Getting hammered because of crude oil. We'll look at that later. Let's look at some oil names. Exxon, just sloppy more than anything. Okay, here's Conoco. Yeah, that doesn't look too hot. Here's Valero. I like Valero because it's hitting up against the 200-day moving average, so we want to watch for a move one way or the other out of this little consolidation here. Let's look at tech stocks now. Apple. Yeah, it took a nice pop to the downside, or nice chop to the downside here, actually. Now it's consolidating. So let me blow this up, see if it breaks one way or the other. Amazon, yeah, I mean, just when it looked like it was coming out of the tank, it just comes back down below the moving averages. I let this digest a little bit, but doesn't look so hot. Facebook, nice consolidation here. See what this is going to do. Twitter. Yeah, Twitter is just, I mean, you got this gap here, which it filled. Now we want to see is it going to go lower here? If it is it going to break down below this 35.95 number? LinkedIn, consolidating here. All right, let's draw the lines in. We want to see if it can break out from there. Google. Yeah, I mean, Google does not look great here at all. Google looks like it may want to retest these lows. I've been talking about Google saying that, I'm not really looking to short the market overall, but if I was looking at particular stocks, you want to look for the weaker ones. So, I mean, again, I think that shorting should more than likely be held to intraday or very short-term swings, as in, looking to hold it for a day or two. But if you are looking for shorting opportunities for longer, you may want to consider Google. To me, the trend is up. I'm looking to buy pullbacks in the overall market and the stocks that are showing good beta with them. All right, so there's Google. Let's look at, oops, I wanted to do Baidu. Yeah, Baidu, hammer at the 50-day. Let's see if this can get a bounce. Netflix, yeah, I mean, almost gave it all back here. And it looks to me, if we do get a rest, Netflix is one that is probably going to break lower and at a minimum test these lows, if not going below that. Here's Potash, too sloppy. Las Vegas Sands looks like it's going to test the lows. Will they hold or will they give up? Wynn Resorts at new yearly lows? Almost, but we're back. What's more important than the exact amount of months that we're at is we really have to watch this low. So last week's lows are key, because if we break this is what's called a mini pendulum. In other words, we broke out of here to the upside. I remember we were watching this when it happened last year. If it breaks down here, it's suggestive that, this was, this is a real breakout. Obviously, it went up, whatever it is, 60% from here. But it wound up that this could be, could trap a lot of folks here, and they may run for cover. So if this breaks, I would be looking for at least a test to the bottom of this, which is 156, and you got 150. And then you got this level down here, the 137 area. All right, let's look at bonds. Bonds, after the blow-off high here, pull back, consolidated now. It's pulling back here. I like this little consolidation. If it can break up, still watch the 144. But if it doesn't and it comes down, watch that 50-day moving average. Gold is coiled up. Better off letting it tip its hand, but I mean, this was a really nice move on this one session, but I don't know if the downside's over yet. All right, silver, similar, crude oil. It looks like it wants to go lower as well. I still think oil has lower prices to be seen. I tested the '09 lows, that's fine, but I think if that gives it up, I think this could go sub $60 a barrel. And I know a lot of people are calling it, it's bad for the economy. All right. I mean, I like paying less for gas, so that's fine. I'm not going to get into that argument here. Sugar looks like it's going lower. Coffee looks like it's going lower. So watch the lows down here on coffee. 167.75. Let's look at the grains. Okay, wheat into the 200-day moving average, has to get above that. Corn, nice little consolidation here. This is not a cup and handle, but you want to watch basically the 400 handle. And what about beans? Whoops. There it is. I was like, wait a minute. Yeah, so beans are lagging. But I got to tell you, if wheat and corn could get rocking, beans could be a nice laggard play here for a move up to the 200-day moving average. That's about 100 points from here, so that's nice. All right, I mean, remember, this moves at $50 a cent or $50 a point. It's like the S&Ps, okay? So 100 points is nice, all right? If it gets there. But for now, it is a laggard play, so if corn and wheat can continue, remember, they have their own issues to watch, but if they could get there, then, we want to watch to see if soybeans can catch up as a laggard. So again, I think we could use a pullback. Doesn't mean we're going to get one. I'm not calling for a high here. I think we're going to go higher into the end of year, but I would love it to come after a pullback. This week would be a great week for a pullback, and then next week, in the middle of the month, we start a final move higher. But again, I'm not going to argue with price action. I still think shorting is for intraday or very, very short-term swings. But, if you gotta short for longer than that, look for stocks that are underperforming. All right, stuff like Google and like a Twitter or Netflix. All right, so I look forward to seeing you at the webinar on Wednesday, where Paul Schatz and I will be talking about market timing and the January effect. Any questions, tiny@stockmarkettrendsx.com. Talk to you in the daily email or in next week's video.